Hello and welcome to Average Traders. We're in 2022.
2020.
We made it.
We did it.
Yeah, Rajan, I haven't spoken to you since last year.
It's been a long time. It's been a long time, No, haven't traded since last year either. So, I'm getting a bit of withdrawal symptoms over here. So,
yeah, so 2020 was an absolutely phenomenal year. 2021, again, another amazing year for us. Let's see what 2022 has in store for us. So we're going to be discussing our predictions for 2022, showing a few trades as well. And yeah, let's just get into it.
Yeah, well, I mean, so 2020 and 2021 have been both quite unique years, especially by the way, like some of the characteristics, like 2020, not much has to be said about that. Like we had the start of the pandemic, some crazy, mad volatility in the market. 2021 was a real, I feel like the leaders in the group, the massive caps, pretty much just absolutely drove this whole market. Like the whole market was pretty much Apple, Facebook, Tesla, Google, Amazon, and then a lot of these small caps got left to the dust. So, I mean, I'm hoping 2022, some of these smaller caps and mid caps sort of catch up and we get a bit of stagnation in 2021 than we did in 2021. But it will be interesting to see how it works out. But this is my predictions, I guess, what I feel like is going to happen in 2022, and whether they actually happen or not, well, only time will tell. But these are my assumptions, and so I feel like the supply bottlenecks will continue beyond mid-year. So a lot of the market forecasts and a lot of the CEO speak that we've had over the past few months has been that we see bottlenecks easing by mid-2022. But I got a feeling that this is going to continue beyond mid-2022. And we've seen this massive spike up and massive rise in the Omicron variant and the COVID cases happening. We've just seen a comment from one of the UK government officials saying that 25% of workers could be off work at the beginning of this year. And that, again, could just lead to another cascading of these supply chain issues. And so this is going to, and I think this is going to underpin even more supply bottlenecks and could lead to even more inflation in the short term, which is not going to be, healthy. And how the market takes it, I don't know, because we've been hearing this whole thing transitory, but boy, it doesn't seem like it's going to be transitory anytime soon. So we've already seen the Bank of England hike rates. The Fed is cutting back on their QE. So let's just see what happens. So although I would like the big caps to stabilize, I still think that with this inflationary environment, I think that the big caps will continue to be the go-to trade. But I think that we will see small caps outperforming in the early part of the year because we had a lot of them sell off huge, and I think a lot of that was to do with tax loss selling. And so I do think there will be a lot of bargain hunting at the beginning of the year. So we might see a bit of outperformance in the Russell, but then that will sort of normalize come past the first quarter, second quarter, and it'll be interesting to see how these companies are adjusting to these higher prices and inflation. And in terms of rates, I think the Fed could raise twice. The ECB, they'll remain on hold in their negative thing. And then I think the Bank of England, which did raise to 0.25, we might see a 1 or a 2 25 basis point rate hike as inflation persists. I think for house prices, that the prices will continue to rise, but at a slower rate than in 2021. One of the biggest hit sectors during 2021 was China stocks, and I think the Chinese government crackdown is to continue, and it will be stock market negative. Again, we might get some periods of rebounds for some of these Chinese stocks, but I think we're going to see more of these big US listed Chinese stocks start moving over to Hong Kong to appease the Chinese government, and that will continue to have pressure on Chinese stocks. And then on the cryptocurrency front, I think we'll have a softer year, but individual quality projects will see big gains. So we've seen a lot of these layer 2 projects like Matic and Terra, and then we've seen these NFT plays like Decentraland. So I feel like projects like that are seeing a lot of adoption could see continued rise, whereas Bitcoin and maybe Ethereum and those type of projects will just be a lot more robust. We might see a 10% gain, 15%. You'll see a bit of volatility through the year, but I don't think we're going to see these 100, 200% gains like we did last year. So that is what my assumptions, like what I feel, like what we feel that will happen in 2022.
Do you think the Fed can afford to raise rates twice next year? They've printed all this money. They obviously have to pay interest on it. Do you think the threat of raising rates was their goal rather than actually, raising it twice? They've obviously seen a lot of inflation, and if they stomp on the brakes too quickly, do you think it risks slowing us down a bit too much and then, taking us into recession territory, especially when Biden is coming up to an election year, right?
So,
do you think that he's...
I mean, first of all, with Biden,
yeah,
the Fed is supposed to be independent. So when Trump was in power, he did pressure the Fed a lot to do certain things. And I think with Biden, he appreciates that the Fed is independent. So I don't think any government will have any bearing on what the Fed decides to do. But I think it will all depend on inflation. Right now, the US ended the year on 6.8% annualized CPI. We've seen inflation compounded with shrinkflation. So you're seeing a rise in food prices and you're getting less of it. So although it might in the basket show like a few percent rise, really it's like a 20% rise, but you're getting half the amount. Used car prices still elevated. So, I could see that subsiding a bit. Air travel, well, I don't know what's going to happen with that. Energy prices, now that's what they're all holding on. So oil has come off the highs. We've seen natural gas in Europe especially, and the UK come down quite a lot. So that's going to sort of help the numbers a bit. And I think so. But I think the core inflation numbers are going to remain high. I think that the headline will be the energy prices will have a lot of bearing on it. But the thing is, with the Fed, it depends on how much, because I think even if they raise it to 0.5% on a historical basis, that is super low. So I don't think actual future rates will go up that much, because it's all about the perceived move past the expected 0.5% to 0.75%. So the way the market is pricing it is that if they see the Fed move into 1.5%, 2%, then I think it could put the stock market, put the brakes on the stock market a bit, and maybe could trigger something. But the thing is, I think the market's already expecting this, and it's more about what is anticipated beyond that 0.5 to 0.75%. So I think at 0.5% to 0.75%, I don't think it really make that much difference personally in terms of any recession threat. I think the main recession threat is inflation, and it will be interesting to see how that persists.
So what's your take on 2022 being the year of, the end of easy money?
I mean, we've had 2019, was a big year for the market. 2020, after that mad sell-off, ended up being a strong year for the market. And last year, I mean, the French CAC was up 29%. I was looking at the components of the French CAC. Some of these names, like Louis Vuitton, up 75% last year. You got so many, the FTSE, which is just a dog in general, that was up 15%. The DAX in Europe, we had mad gains. We had the S&P. I don't know what it ended up, but around 25%, I believe, was roughly what it was up. The Nasdaq was even more than that. But again, most of these gains were driven by the large caps. But whether we can now have a fourth year of these double-digit gains, I mean, I'm just playing the probabilities here, and I think it's going to be a lot more volatile, especially with inflation how it is, and especially with, the thing is that all of these central banks, they have bottom of the barrel policies right now. So what can they do to react to another recession, or if something happens? When we had the start of coronavirus, everyone cut their rates, everyone started to put on the QE and everything like that. But all these, I mean, we're already at the lowest rate. So what can these banks do with inflation where it is, and can they afford to take the type of action they did before, given what's at stake here and how much it could, stoke inflation more? I actually saw, I think it was Tunisia. It's an African country. I can't remember which one it was. I think it was Tunisia. The Tunisian inflation rate was 10%, and the US is 6.8%, allegedly, right? And I mean, I've never seen an African nation and in the US inflation so close together. It's nuts. I mean, I feel like these guys can't react in any way to the way they did before. So it's going to be a real tough one for these central banks to navigate. So, I mean, we'll see how it all goes. But I mean,
So what's your take on Cathie Wood's ARK-K, ARK-G, have had a terrible second
I
half of the
mean,
year.
they were. I
They
sent around the article, wasn't it? It just, I think the average fund was down 15 to 20%, given the actual rise overall in the market. So they massively did underperform. But the thing is that a lot of their names are so smashed that just naturally off a low base, you could see them have a half decent year next year. And so that takes me on to some of just some of my flyers for next year. Like, you've got your obvious ones, but I've always been a fan of SoFi. Um, it's a leading neobank with strong growth. It's got a good student base, and we've been all waiting for this bank charter. There's been a lot of chatter around it. So I think when the bank charter comes from, they managed to get that bank charter, that their base borrowing rate will decrease massively, which will allow them to give loans for cheaper. I think will be a good catalyst for them. So I think SoFi, which I think closed around just below $16, it's had a pretty volatile year. I mean, it's got as high as I think 28, 29, as low as in the 13s. So I think there's good room for SoFi next year, if the market goes the way it is.
Yeah. It's really interesting looking at the history of that company. I mean, they started out as student loans, right?
No, that's it.
To see how they've flipped their business model, they deserve to be priced higher than now.
Yeah, I mean, so I feel like SoFi sort of falls into this whole category with not the Cathie Wood stocks, but these small caps that have just been pounded. Yeah, SPACs. We've talked about this in our first podcast about these SPACs, and since then it's even got worse. So I mean, we've seen so many SPACs now below 5, not even below 10, and so SoFi has been one of those SPACs that has outperformed along with a few others. So I do think I think the real problem is that the student loan business is a decent part of their business, and Biden has now extended the student loan forgiveness program once again, and so that I think caused a bit of a headwind on the stock. So the question is, when will they see that revenue coming back again? When will if we get more of a recession, I could see the U.S. administration continuing to extend the student loan forgiveness program, which will obviously affect the revenues of SoFi. So that could be a headwind potentially. But I think generally, they have the young crowd, and they're being, one of the biggest things I think that's going to help as well is that they're working on their options on their SoFi platform. Right now, you can only buy stock. So I think when they add option trading to it, that's going to be a nice additional revenue stream for them. So I think it's a pretty good. I think it's right there at around 15 where it is now. Moneyline is another one that I actually think. So Moneyline is like SoFi, but it has been absolutely smashed, right? Absolutely smashed. I think it is trading at $4.03. It closed at 2022. I mean, considering how much they're valued at, so 924 million, whereas SoFi, let's see what the value of SoFi is right now. I think it was SoFi finished at 12.6 billion. So I mean, Moneyline they're doing revenues, they're growing their user count, and I just think purely just because it's been smashed so much at $4, could see room back up to 6 or 7, and then so if from today's price, that's a 50% gain. So I mean, I just think that has been one of the ones, considering the business, and it's not like one of these guys that are saying, "Oh, we're going to start making revenue in 2026." I mean, they're making revenue now, they're growing their revenue now, and they've got. You can see on the group the reviews that there is a lot of people that are reviewing the product, and I feel like just purely as a rebound play. Not saying it's going to go up to 10, but I reckon from here it could rise about 50%, 60%, 75%. So just merely on the fact that it's a similar type of business as SoFi, and yet it's worth about 1/13 of it. I think it's got some good potential. We spoke about China, on the assumptions, but I think near term KWEB, which is the Chinese internet ETF, is trading at a 5-year low. Seen Baba, Tencent, all of these massive cap stocks have been bombed. I told you, I said how last time, I'm out of Baba, but
Yeah.
I did actually nab a little bit of KWEB just on last week. So we'll see how that turns out. I think right now it's trading at 35, 36. There was a big dividend that got paid out. So I remember it was at 38 and it went to like 34. And I was like, what the hell happened there? But then there was a huge dividend that got taken out. So, taking that, X that dividend is around 36. I think it can get back in the 40s again, 45 as things sort of settle down and the market prices in what China's already doing. Whether it's going to be an outperformer in the year, I don't know. But I think at these levels, risk reward is there, 5-year low. And I mean, that's one of my ones. And then Robinhood, another one.
Good.
17. This stock IPO'd at 35, meaned all the way up to 70, almost 80, and now it's at 17, 18. And the thing is that, it deserves to be there because the numbers were horrible. But this introduction of the crypto wallet, I think, is the key to Robinhood. Now delving a lot more into crypto myself, it's not just about buying and selling crypto on a platform. It's all about able to move your crypto around to different dexes all around. So moving it to Sushi Swap, Pancake Swap, staking it in different projects and this and that and this and that. And the thing is that if you've got a wallet, so if you've got Robinhood, which has your stocks, you've got your options, and you've got your crypto, but with crypto with a wallet, and you can move around your crypto to various projects, I think it could be a great all-in-one solution that is not available really in any other platform where you can have your stock. You've got stocks, options, crypto, but crypto that can only stay within that one platform. So if you have the crypto with the wallet along with your stock and options, I think it'll be a compelling place to have that all-in-one. You can sell your stock and then straight away then buy a crypto, then send it off to one, a DEX or buy an NFT or something. So I think this is why I think from the base we are in Robinhood, I think there's upside. So
one thing I'll say about Hood, I have a small position in them. Obviously, it's been smashed, but their market cap is $17.3 billion, and they've got $10.66 billion in cash. So if
I didn't even know
it, yeah. They've got So their enterprise value is just about 16 billion, but insane. Like if what you're actually buying, if you subtract cash, it seems very cheap. But then the market isn't dumb. The market's smart, right? So what are they really pricing in here? Is it in December? We had a lot of sell-off, for tax loss harvesting, and everyone's going to get back in tomorrow. Let's see. I do think it's a deal at the price.
It is funny because I'm just on Yahoo Finance now. I'm just checking out. So I see the market cap is on Hood at 14.9 billion. And bear in mind, we have come off massively. It's still saying on this Yahoo thing that it's overvalued. Even though we've come down 60, 70%, it's going overvalued.
Oh, it's 14 billion. Sorry, I was looking at intraday. I was looking on the statistics page.
It's still
14.8 billion. If you go to statistics, you scroll down, go down to balance sheet, the total cash.
Financial. That is.
Anyhow,
so we'll just see. Yeah, I mean that'd be interesting. So, I mean, how about you? Do you have any? Obviously, you're balls deep in Tesla. So what's your what's your thesis on that for this current year? We obviously had the really strong Q4 delivery numbers today.
Yeah, we got some hot off the press numbers for Tesla today. They delivered a staggering 308,000 cars this quarter for production of 305,000, right? And if you look at Wall Street, they were expecting 265,000. So it's just insane. They've delivered a staggering 936,000 vehicles in 2021 in a year where supply chain shortages have been plaguing everyone, right? And they seem to be scaling at just such a huge clip. And one of the amazing things is these numbers are without Berlin and Austin factories, right? They sold almost 1 million cars without Berlin and Austin. Just imagine once those ramp up, it's going to be insane. Now, tomorrow, obviously, EPSs are going to be revised, and depending on the macro sentiment, you have to expect a sharp rise in the stock price. I think like analysts are gonna, scramble and be forced to upgrade somehow, and it might trigger a series of kind of like one-upmanship on the upgrade front. It'll be really interesting to see, the call volumes over the next coming, 1 or 2 weeks. It just shows like Tesla is just flexing their muscle. I feel like
it's the call options that have driven a lot of this. But the thing is, it is worth at $1 million. They are selling 1 million cars, but we wouldn't expect anything less because the company is worth 1.1 trillion, which is 4 times higher than any car company. I don't know what the highest car market cap, and I know it's a technology company and all of that. But the thing is, at the valuation,
just look at their margins. No one has close to those type of margins. Like, who's selling that many cars at that margin? No one.
And that's why it's 1.1 trillion.
Yeah, of course. This is the thing, and it deserves to be that. But they still have to carry on executing. They can't afford any kind of slip ups. I could see the mainstream media already putting out articles, saying, "Oh, there's a huge recall on Tesla vehicles." I guess there is a small issue in terms of their rear cameras. So I had mine taken in for the same issue. They resolved it quite quickly. Interestingly, I was able to get a loaner of an older Model S. It was a 26th version that had the Mobileye FSD chip. Well, it's not really FSD, but actually using that compared to the Model 3, you just realize how far Tesla has come in just a few short years and how far ahead of the competition they are in terms of FSD. So actually now when we look at the risks to Tesla, I mean, there's not too much emphasis baked into the FSD in terms of the stock price, I think, but in terms of sentiment, if, Elon expects FSD to be ready in 2022, as he said in his recent Lex Friedman podcast, it better be ready then, because it's been next year for the last maybe 4 or 5 years for Elon, but it is an immensely difficult task, for cars to be able to drive themselves. Just if you just actually think about it, I mean, for the cars actually have to understand reality around it, meaning they have to take pixels from the cameras and turn them into a vector space, which means kind of like a 3D environment in real time. And this is much, much harder than it looks. I think even Elon, he understands the product he understands the issue from the higher levels, but when you really get down into the deep, they're getting to local maximums and they have to keep on changing their approach. And I hope they've got it now. The FSD version 10.8 seems to be a bit of an improvement, but if we don't see 10.9 and eventually 11 kind of have that real step up in improvement, I can see a kind of potentially negative catalyst. And then I mean, things to be bullish about in 2022, 4680 cells, just going to bring the cost down like crazy, and the Austin and Berlin factories opening, and also Cybertruck and semi-production. If those go smoothly, then you can see like a real big boost. I think I'm predicting ending the year around 1,500 in terms of the stock price, if they continue to execute.
All right. So now I'm talking about a couple of trade ideas. We've been doing this in the past couple of pods. So this time round, these are a couple of trades that I've got lined up, or that actually undertook last Thursday. I put both of these on last Thursday. One of them is Polestar GGPI, the Feb 18, the IV is 52. So the thing is that I don't know why the options are priced like this, but you're virtually paying less than the intrinsic value to do this spread. So it was a buy the 110 call, sell the 15, buy the 10 call and sell the 15 call. And the thing is that I've done that for $110 debit, or $1.10. And the thing is that at the time, the stock was at $11.40. So the thing is, I was getting it 30 cents cheaper than the intrinsic value at the time. And so it's very weird why it's priced like this. And you know, maybe someone could tell me, but it seems like you could put on the trade cheaper than the intrinsic value. And so I feel like $1.10, you know, so I thought it was a pretty good trade to do. I think it closed on Friday at around 11.70. The max profit on trade is $390 on it for a $110 debit. So you're looking at almost a 1-for-4 risk to profit ratio. So and I think Polestar, like, they're selling vehicles. I mean, we've seen the way Rivian's being priced. We've seen the way so many of these other EV manufacturers are being priced, even though they're not producing anything. Polestar are actually producing cars. And, you know, quite oddly, I'm actually seeing quite a few of these around. Actually, when I went to London, I went to the Polestar showroom.
Yeah, we went together.
And the thing is that it's an okay car, but I'm actually seeing a few of them around. So I don't know, you know, and I think it's not about the Polestar 2, which is the big thing. It's the Polestar 3 and some of the concept cars and some of the production cars they've got for some of the new products they're coming out with. So I think they're definitely going in the right place, and they actually have a production line, and you know, they've got Volvo obviously backing them. This is the Volvo spin-off, so they've got the money behind them to make this project work. So I think again, this is a short-term play, but I think we'll remain above $11. So hopefully the 110, you know, at worst case, you know, lose $10, $20 on a one lot. And then the other trade is Robinhood. I already spoke about this. So I think that we are going to get a bit of a bounce early doors. So I've done a Jan 21, sold the 18 put, bought the 16 put for an $80 credit with a max risk of $120. So that's about looking at roughly 40% profit potential on the spread. There's a 24 IV rank. So that is what I've put on. And talking about some of the previous trades that we spoke about before, I did talk about the broken wing butterfly in Tesla, where I bought the 840 put, sold the 850 put, and the 1175, 1180, taking in $290. On the move up, I closed out that trade for $1.45. I put on that trade on the 21st of December, and on the 30th of December took it out for 50% of the max profit. And I did that because in 9 days I managed to get 50% of the premium out of it. And there was 21 days left until the option expired. So, you know, to be honest, to take out 50% of it in 9 days, I didn't really want to hold it, because I mean, we could see the year, you know, start off where we could start testing towards that 1175 call. So took 50% on that one. My DraftKings bull put spread currently, DraftKings is hovering around just around the 28 level. I took in 65 credit for that. It's currently trading at 82 debits. I'm about $17 underwater on DraftKings, but it's Jan 28, so hopefully we get a bounce on that one. And in Alibaba, that one's been a bit of a weird one. I had the Iron Condor, the 120, 122 put, which is actually expiring this week. It was trading at 112, and I was looking at rolling it, and then we had that huge rally on Thursday where Baba rose $10. So it went up to 122. I sort of just held on, and I think it closed around 119. So I'm hoping at the beginning of next year we have a little pop, and then I might just look to scratch, maybe take a few bucks profit, or if there's a good roll option, I'll be looking to roll into that. So that is what I have done on that trade, and I will be linking a spreadsheet, a Google Doc spreadsheet, which will show the trades that I have put on, the current profit and loss and stuff like that. So far we've closed 2 trades. That's the DocQ for $105 profit and the Tesla for $145. I have to still input the Robinhood trade, but so everyone can just track the trades that I've been doing. So that's what I plan to do, so you can see in real time, you know, the trades that I've done. But again, this is just for information purposes only, just so that you can see, you know, how average we really are.
So with Tesla, last year I sold some longer term puts, 2023 Jan 980 puts, 1000 puts, and the 16th of June 2023 puts as well, 1000 puts. So that actually gave me quite a decent credit. So I was able to use that to kind of offset some of the shares that I've been buying recently. Yeah, because I just can't get enough of Tesla. It's just for me personally, it's just like the stock of this decade, and I think it's going to be the stock of the decade. And you can maybe hold me to it. It's just an opinion, but I think that Tesla will be the largest market cap company in the next couple of years. Maybe up to 5 years. But it's going to be coming up to the Amazon, Microsoft, and eventually Apple level. Soon, because it's just a juggernaut. But yeah, let's see what happens there. Like, actually, just going on to your GGPI trade that you're making, I really like what Geely are doing in terms of and Volvo for the Polestar brand. But in terms of that, I think it's just the first in the kind of Chinese assault of EVs coming across to the US, and it's. When you think of Polestar, you don't think of China, right? So it's not like getting a Neo or Xpeng coming along and then taking everything. It's Polestar, it's Volvo, they're safe, whatever. So it's going to be just the first in that wave, just slowly killing out the vehicles from GM and Ford, and taking their market share away. And to be honest, it's needed for the US. There needs to be more competition. Just way more EV brands need to be involved in the mix, and especially pure play EV brands that can actually make the vehicles that are required to satisfy what seems to be like insatiable demand. More and more people obviously coming to the realizations that EVs actually work in most situations. Now, one of the things that I think is going to happen is there's going to be a big re-rating in the valuation of like Rivian and Lucid, once we start seeing their delivery numbers. And also in terms of with Rivian, they raised an absolutely colossal amount of cash. They'll be burning 4 billion a year. That's their current run rate. So they've got about 4 years of 16 billion cash that they raised. And they need to obviously prove themselves in that period, which I'm sure with all that cash, they should be able to. But I think sometimes having too much money means that you don't focus on the efficiencies, right? It's going to just more be about getting it out there. And I think that that's going to really then, when it comes to crunch time, in a couple of years' time, for them to really prove themselves profitably, to be like a self-sustaining, profitable company, it's going to be really interesting to see if they can actually do it. Whilst if you look at what Tesla raised in their initial IPO, it was around 250 million or 260 million or something like that. The reason why Tesla are where they're at the moment is because they've had to be like really cheap, and like try to get out every little bit of efficiency that they can in all parts of their supply chain. They have to be relentless on being able to just survive. And now, because that's in their DNA, that means that they are on the road to create cheaper and cheaper products, even though right now the promises that they had in terms of making these vehicles cheaper and cheaper. Model 3 was supposed to start at 35k, but I think now we have to all look past that, because inflation, if it was 6, 8, 10% or whatever it was, if you look at when they were looking at those announcements in 2016, 2017 of the Model 3 being 35k, you add inflation onto those numbers, I don't think even the 25k Tesla is going to be coming out at that price. Everything's kind of moved on. But let's just see. Hopefully there is a deflationary effect on the price of these vehicles, with all the technological innovations that Tesla is going to bring. And hopefully, if they are able to solve FSD, you're taking out steering wheels and all of this other stuff from the vehicles, and you kind of like just, changing the form factor to really just look at it as a kind of pod that needs to drive around, rather than this kind of performance vehicle or whatever it is. Let's see if they're able to rethink it. And
I think it's a bit of time before
bring the cost down.
Not see a steering wheel in a car, but you're seeing all the concepts around there. Definitely. So let's just see if that comes to reality. Still remember Back to the Future, watching it. They were predicting by this time there'll be flying cars. That hasn't come yet, so we'll see.
I don't think that's think that's coming. But I want my small pizza that turns into the big thing. Yeah. What happened to that?
I've been waiting for that. Like, even before before the self-driving car, but has not happened yet.
Yeah. But, where's the vest that drives me up off the road?
Thing. So many things we're looking for that did not come. So let's see what happens this time around. But all right. Well, have a good year. everyone, wishing all the best for 2022. And we'll be looking again, as always, to continue doing some pods and bringing on people that we haven't done yet, but we will be doing during the year. So
We're working on it. Everyone has
yeah,
busy diaries at the moment,
yep.
so just bear with us. We'll be bringing you some quality guests in this upcoming year. We really appreciate it. If you could just hit that like button, it really helps with the algorithm. And yeah, thanks again for joining us, and we'll see you guys in the next one.
Peace.
Peace.